Hey, what's up? Welcome to Degen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts like the chart behind me, which is of Polestar Automotive, ticker symbol PSNY. And I will also be doing updates on Luminar and Mobileye because they all kind of relate to each other. And I think that they might be near bottoms with some potential bullish action coming in the next couple weeks. So I think it's pretty exciting, and I wanted to share. And so to start looking at Polestar, I had just noticed this mainly because I had shared this video on the community page of the channel from Luminar, a live stream that they posted yesterday. And they went over a number of collaborations that they have. One of them being with Polestar, also with Mobileye. So I thought I'd introduce Polestar to the channel and then give an update on Mobileye and Luminar as well. And yeah, so to start to here with Polestar, this stood out to me because it was right around $2 yesterday on January 9th, having closed at $2.01. And look, it had looked like, it might be forming this bottom there with multiple tests of $2. It first hitting that level on October 30th with a close at $2 on the day and a low of $1.98. Following that, it did have a lower close on November 9th, with that close being $1.99 and a low of that day, again, $1.98. We did get a lower low on November 28th, which was actually, no, that's another $1.98, but we did get a lower low today on January 10th of $1.96, but then closing again at $2. And so one thing that, stands out to me, it might stand out to you if you've been watching the other videos, something that I look for is divergence with the RSI. And so we could see that there are lower lows formed in the stock price, whereas the RSI has formed a higher low. And so that is bullish divergence, which could suggest bullish moves are in the future. And so, that's pretty exciting for me. But then considering that, since we did form a new low today, it is quite possible that we do go even lower. So I do think it is good to be cautious of that. I don't have any levels marked lower just because I don't have anything to base it on because this is a new low. So it's uncharted territory. So do proceed with caution if you do choose to partake in Polestar. But so as far as levels moving up that stand out to me, I do have $2.17 marked in orange, which is based on the open on September 26th. And then it had a low on that day of $2.16. So right around there, we do see a lot of consolidation there. And that also does seem to be in the midst of, this kind of broad volume shelf here. Lots of consolidation here. So that actually might be a level, that would be tough to get to, and then also tough to break above, let's see, $2.25. But once it gets to that level, there's really not as much volume above that. If we see actually right around $2.30. We get this break in that volume shelf. And then another level to the upside is $2.50, really that just being a psychological level, having first, actually acted as support on September 28th. That was the low of the day. And then price did move above that, but then returned to it, acting as support again. And then more recently over here, let's see, that's between December 14th and 28th, it has served as resistance. So I do think that is a significant level as far as the chart goes, also just a psychological level. And then beyond that, there are a couple gaps that stand out. One that was formed between September 6th and 7th, being at a price of right around $3.11. And then this other one formed between August 30th and 31st going up to around $3.76. So those are two gaps that have the potential to be filled. There is potentially, more resistance following that. Like right here, we do see some resistance around the price of $2.90, $3 also being a psychological level. But at around this price, we do see that the volume traded, the volume shelf tends to die down. So if it does make it up to $2.90, it could actually move higher to fill this gap before getting to this little volume shelf here. And then also another thing that seems really bullish, big picture, that you might have noticed is it looks like it's in this big falling wedge. And that is based on, let's see, the bottom of that is based on the low of October 24th, 2022. And let's see, the other pivot point is over here more recently, being the, I believe, open of September 26th. So those are the two pivot points to get the bottom of that. And to get the top of the wedge, that is going to be based on the high of November 25th, 2022. And let's see, I believe the close, or maybe the high on, let's see, July 12th, 2023. So that's how you get that wedge. And to me, this just looks like there are a number of bullish factors with Polestar, given the bullish divergence as one. Looks like it's finding support around $2 unless it does break below and close below. So with that being said, we don't want to see closes really below this prior lowest close of $1.99, or especially closes below the lows of $1.96. We don't want to see that. But with that being said, the bullish divergence respecting $2, and then this broader falling wedge pattern. There are a number of things here that look bullish. And then also, if we do look over at the max pain, this only has monthly contracts. So if we look at that, the max pain for next week, closing the week, January 19th, is $2.50. And so that is where I have this red line marked. So we could potentially see moves going up to that level, but it could also close below that. That would mean that bears have control. So hopefully we do see moves upwards, but we'll have to see. And then before this video gets too long, I do want to go over Luminar. I do think this also has some bullish stuff in its future. It did return to this gap level that was excuse me, at $2.87. So it did more properly fill that gap because it hit that level during market hours. And so I do have this yellow line marked at $2.85 based on the close of December 13th. Excuse me. And so, hopefully it can hold that level, but it does look like there's not as much volume traded below it. So it could come down to, let's see, I have $2.62 marked here based on these levels, consolidation below, as well as the red line at $2.50 based on, the consolidation here and, this volume shelf that we see. And thinking about max pain, if we do look over, this does have weekly contracts. So closing this week, January 12th, max pain is $3. So that is up based on the current price of $2.86.5. But then if we look at the following week for the monthly contract ending January 19th, that does have a max pain of $7.50. So that is pretty remarkable, going up, to this white line that I have here, basically. So a lot of upside potential, but, it of course could close well below the max pain. Doesn't have to close at that level, but it did return to this level of significance in my view. So hopefully it can hold that and start moving higher. And then finally, I do want to do an update on Mobileye because it has been uptrending, which could be viewed as bearish consolidation, especially with the candle today. That does look like a bearish engulfing candle. It does engulf yesterday, January 9th's candle. But we have seen higher closes in the prior trading days. But what we really want to see is not only a close, a new higher close, which would be above, let's see, yesterday's close was $31.89. So we want to see a close above that. But really what we want to see is a close above the prior highs. That would be $32.71. So hopefully we can get some upward moves tomorrow. Let's see, I believe I went over these red, orange, and yellow lines in the past video. It does actually look, somewhat good that the low of the day, which was $29.77, right around this red line, it does look good that that served as support. It did bounce, but again, this bearish engulfing candle does not look so good. But an encouraging factor, if we do again look over at the max pain, this is again monthly contracts only, closing next week, January 19th. The max pain is $34, and so that would be moving up to this purple line here, which would be, filling this kind of intermediate gap that I had pointed out before. But, there's still plenty of upside to fill these gaps. However, I am a little bit concerned that this is bearish consolidation, but we'll have to see. Can we make a new higher close, beating $32.71? So we'll have to see in the coming trading days, and of course the closes of the weeks. I think that's going to be pretty important. But anyways, those are my thoughts on these three stocks. If you found them helpful, make sure you like the video and share your thoughts in the comments below, and also subscribe to the channel for more videos like this. Thanks a lot for watching.